Good morning. What's up, guys? How we doing? We've got quite the volatility. Look at ATR. The average range here of a 5-minute bar is 78, 79 points. Are you kidding me? Are you kidding me? Ridiculous. It was even higher than that for the majority of the morning, at least after, quite a few bars populated once we got down into that, 7, 8, 9, 10, 11, 12 range as far as the bar count. Maintaining nearly 80. So I am sizing down in terms of contract size today, and I'm going to let the volatility do its job here for keeping my risk size about what I expect, somewhere in that region, and getting to work here. So bar 28, 340 out. Let's see what we can do here live on YouTube. You're trying to make a little bit of money, huh? Let's see what we can do. It's crazy. Corey, how we doing? Z, what's up, brother? News Gamma, Tina, how are we? All right. All right, see if we can make some money here on a Friday. Got bills to pay all weekend, man. All right. So, my question here becomes, it clearly seems like the market's trying to push down and test 28K. Whether we do or not, I don't really care as far as taking a trade into it. I don't really care about 28K itself as a level. The reason I do mind if we do that is because we tend to sideways range around 28K. And I don't want a sideways range around 28K because that tends to kill volatility. So that's the look. For me, I look at this and I'd probably draw it really like this. Realistically. The understanding that there's a big sideways range here. Now, getting short right into low a day, which is the wick low at 10, it's so volatile that, the way that I look at things is going to shift a little with such tremendous volatility. But I also got to keep in mind, this is a trading range, right? So, watching that wick low here at 27. Bartlett Fox, how we doing? Okay, so it's going to be the rollover 28 into 29. Now again, I keep eyeing this. Got the wick high at 28, wick high at 27, wick high at 26. Now, by the way, when you're looking at this stuff, you really got to pay attention to how far away things are in terms of points, and are you sizing yourself appropriately to be able to handle that. I've seen it way too many times where people will come in and ATR will be this and they won't really notice because it looks sort of like a trading range, right? They're not paying attention to the size, the distance traveled from the high to the low or the low to the high of each individual bar. So they don't adjust their size. And then they pick a stop, even if they're trading price action, that seems to make logical sense. And, you know, they probably assume that it's somewhere between 25 and 50 points. It ends up being 100 points, and they don't change their sizing at all. Right? That's a problem. Obviously. And then you look up, and all of a sudden, a whole bunch of your prop accounts, man, let alone a personal account, if you're still doing this in a personal account, that's also a huge issue. But all of a sudden, you lost a lot more than you should be on a single trade in your props. And now you're digging yourself a hole deeper and deeper into the drawdown because you weren't paying attention to volatility. Right, so make sure you are. Make sure you're sizing yourself appropriately here. And just as example, the bar 7 short. Yeah, range on bar 7. Bar 7 was a reasonable short entry, wasn't it? But the range here was 157 points. Does that mean you can't take it? No, it doesn't mean you can't take it. It just means you have to size yourself more likely than not way down. Big bar, right? You probably wouldn't want to take bar 7 with the same size that you would take a similar looking setup if the range on the signal bar, rather than 155, 160 points, was 55 or 60 points, right? Does it really deserve 3x the risk? Probably not. Yeah, so as bar 29 takes out the wick high at 26, it starts getting tough to look at this as a big wedge, doesn't it? It certainly does. So it goes back to my original default look, which is more than likely this as just a big sideways range. Which then puts us right basically in the middle of that range right now. Which, is kind of, as much as I'd like to take a trade, it is no man's land. You know, we love trading. I love being in trades, but I like being in good trades. Not forced stuff. Big Chris says that wick on bar 22 killed me. Says I was so happy with my entry too, completely ignored my stop and triggered daily loss limit. Let me guess, you were short, you had your stop above the wick high at 21? Are you saying you ignored your stop, Chris, or are you saying the platform ignored your stop? A lot of times it's just a lag on the fill. And then it happened to trigger your daily loss. That sucks. I'm sorry that happened to you. You know, it would actually be a really great situation is if the bulls could take us above the wick high of 17 and hold it. Kind of, I don't want to say a big bull trend, but a soft bull channel. That would be tremendous. But, again, if you're just joining us here, the very clear look that we're looking at right now here on NQ, this is a 5-minute chart, by the way, Nasdaq futures, is a big sideways range. Now, we've been getting a lot of these, obviously, this time of day lately, but they're wide, so I don't necessarily need to trade them like a range. I would call them a range and classify them as such. But when you're 200 points wide, I can certainly take continuation inside, but you got to remember ATR is 78, which is very high. So, again, if you're just joining us here, fair warning, make sure you're sizing yourself appropriately, big dog. DR, good morning. How we doing? Chat, call me dumb, but took me 2 years to realize any more than 2 micros on a 50K account is just not going to work. Yeah, it depends how you trade. Depends how you trade. I have done very well in the 2 to 5 micro range per 50K funded. A day like today, I think it makes the most sense to be in the 1 to 3 range, unless you're being extra aggressive. Which, you know, I think the immediate reaction to me saying that is usually, oh, that makes a lot of sense, actually. But sometimes it's, you know, Nico, how am I supposed to get rich? Just to be straight up, they're like, how am I supposed to get rich trading 1 to 3 micros, man? I'm trying to make a lot of money. I'm like, yeah, I mean, that's why we're all here, man. The ceiling, there's a reason you're here, right? There's a reason that you were attracted to the market, because there is effectively no ceiling. Okay, liquidity is the real ceiling, which is a stupid number anyway. And I agree with you, you wouldn't get rich trading 1 to 3 micros. The good news is, tremendous news, you aren't just trading 1 to 3 micros. You're trading a whole bunch of contracts because you're scaling horizontally, not vertically. Scaling vertically would mean trying to trade as big as possible in 1 or 2 fundeds. And I think a lot of people gravitate toward that because they're like, okay, if I can just trade really big in one account costs $100 or $150. Or even if it takes you a couple of evals to pass, you're like, one account, one funded is $150, $200. I mean, you're looking for like 1,000x, 10,000x ROI, depending on how crazy you're looking to get with it, right? And I think you should be looking to get crazy, but the problem with that is you're only given so much drawdown in each account. So like, I think a lot of you guys are really boxing yourself in, saying, I'm just going to trade one funded. Well, if you can get to positive ROI, why wouldn't you trade 20? Or at least 5 or 10, right? Or more. Continue to trade relatively small in each account. It'll help you consistently get to more payouts. And then you make the numbers bigger by trading a lot of the fundeds. And does that increase your expenses? Yes. But it also more than likely is going to improve your actual ROI, because if you're going the route where you're trying to trade 5, 10 minis in one funded account, you're more than likely, unless you get very lucky once, even then I think you'll end up negative ROI, you're more than likely to keep blowing them without getting to payouts. So then it's like your expenses are still more than your return, which is 0, or a couple $1,000 with 10, 20. I've seen 200,000 in expenses from people because you just refuse to scale horizontally. But if you just size down a little bit, trade smaller per account, and say, okay, expenses are a good thing if I'm making money. They are, right? If you could put in $1 and take out 2 or 5 or 10, would you keep putting in $1? I'm really asking. Because I think some of you guys need to genuinely answer this question in the chat because you're not doing that. You just keep putting in $1 and trading so big, hoping to get back $1 million, but the probability, you have to thread the needle so tight to get back even one payout when you're trying to trade so massive in a single funded. Take a few more individual dollars, continue to feed them in, trade smaller, scale horizontally, per account I mean trade smaller, scale horizontally, which means copy trade more accounts, and then you'll take more payouts. The slow way is the quick way, as they say, but it's like a lot of these prop firms have minimum trading days anyway. It's not a big deal. You can get to a 5-day minimum trading day payout trading 3 or 4 micros. Lots of you in the chat have done it. So anyway, this isn't a, do not misunderstand what I'm saying. I am certainly not saying be okay with making less money. Fuck that, dude. Have you seen the price of everything? Oh no, you backed up your car into a post. Or your wife backed up your car, one of your cars, into a post. The mirror is now gone. That'll be $3 grand. This is real life. What are you gonna do? I think it's kind of funny. It's like, fuck, that's crazy. The answer is we just have to make more money. I'm not that guy that's gonna say, just be okay. You just wanna make a little bit. Trade 1 micro in 1 account. Be okay with your $1,500 payout. Dude, a $1,500 payout. Come on, man. Come on, man. I get it. A $1,500 payout would help some of you guys out a lot right now. Do you want to continue to be in that position? We've all been there. But do you want to continue to be in the position where $1,500 would really, really help you out? Or do you want to be in the position where you look at a $1,500 payout and you're like, that's great. I still look at it with the same respect, but like my lifestyle today, that doesn't go that far. That's a good thing, right? That's a very good thing. When things go wrong, you want to be able to just take care of it. Like, holy shit, that's $4,500? That's ridiculous. Take care of it. Ha ha, that's kind of funny. Scale horizontally. It's the faster way to more money. But I also know, some people they think of themselves more as quick buck artists, but I've never seen a quick buck artist actually get wealthy. It doesn't happen. Yeah, we got 60 seconds here till 31 closes up. Kevin says $1,500 times 10 accounts times 20, Kevin. Right? Right? All of a sudden it's like, okay, now it's a $15,000 payout, a $30,000 payout after 5 or 6 trading days. Even if it takes you 10. I think a lot of you guys got to ask yourself the question, okay, 10 trading days is half of a month. Even if it takes you twice as long as the minimum to get to that payout, across 20 funded accounts, that takes you half of 1 month, and you have a $30,000 payout. Now, I know some of you guys make a lot of money. I'm talking to the people who are trying to kind of get it together and get a good income going here. Where else in your life are you making 30 G's in 2 weeks? You know what I'm saying? Even if it takes you 3, even if it takes you a month, where in your life are you making $30,000 a month? A lot of you guys may have never made $30,000 in a month. but yet you refuse to trade 2, 3, 4, 5 micros per account and scale it horizontally because you're like, I'm just going to trade 10 minis and get my $1,500 payout in 5 days. Do you see the flaw in the logic here? You know what I mean? I want you guys to make 20, 30, 50, 100,000 in a month and see what that feels like. It's something else, man. It opens your mind up a little bit. You're like, shit, where can we go from here? And you're in the right place. I'm telling you, the market, even just one prop firm, even if you're just with Apex, even if you're just with TakeProfitTrader, you need to scale. A lot of you guys, you're staring at an opportunity that you could, I think, I don't want to say easily, but you could with relative ease if you implement the discipline and a repeatable decision-making structure. Have your biggest month ever in the next 1 month, 2 months, maybe 3 months, if it takes you some time to figure it out. And I don't get it. I don't get why we're not pursuing that. I don't understand. Why are we still looking for the quick buck? The quick buck is a smaller buck, and it's a less probable buck. Okay, 312 out. Let's see what we get here on 32. Question, if I copy trade, how do I not lose all of my accounts at the same time? Well, if you do lose your accounts, you will lose them all at the same time. And what I would say is, and? Question mark, and? Now, how do you avoid doing so repeatedly? You trade smaller. If you're blowing accounts after 1 or 2 trades, there's one answer. It's you're trading too big per account. That's, again, scale horizontally. By the way, those of you guys who don't understand what that means, think of it this way. Let me think of an industry that a lot of people might be able to. Well, I think everyone we can understand advertising, right? If you have one ad, if you're Coca-Cola, you're in charge. Okay, think about this. You are in charge of Coca-Cola's advertising strategy as of right now, okay? Would you run one ad and spend 10 million a day? Okay, or would you run 100 ads at 10,000 a day? Or 1,000 ads, right, at 1,000 a day in dollars spent on that, right? Well, you'd probably want to go a bit wider to keep it fresh, to keep the creative, the media delivery to your consumer fresh, right? Rather than, unless you're doing a Super Bowl ad or something where it's really a tremendous piece of advertising, like it's a great commercial. That's when you go vertically. You spend a lot on one ad, maybe 5 or 10 million in total, and you run it to the entire country, basically, with the Super Bowl. That's a one-off vertical scale, but most of the time, more effective marketing or ad distribution is done horizontally, okay? Because one piece of creative can really only go so far until it starts getting a little repetitive. So Coca-Cola, that's why you don't see the exact same ad from them every single day. They might scale one that's working well or seems to get a good response higher, but they have a lot of ads going at the same time. Same with McDonald's, same with et cetera, right? So with scaling horizontally, that means going wider with the same end result, or at least the same goal, for a more effective way to get there. Vertically is taking one vertical, one thing, and just shooting it to the moon. So here, if you're trading one prop account, vertical scaling would be, I'm going to trade as many contracts as humanly possible. But the problem is, with a lot of prop firms, your payout is maxed. And even if it's not, your drawdown is set. So if you're taking way more risk per trade with the same drawdown, your probability of blowing it is really high, right? Are we following me? I can't tell if you guys are sitting there eyes glazed over or if you're following. If you're trading 20 accounts, then you're able to trade 2, 3, 4, 5 micros per account. And then when you do get to payouts, which I promise you guys, you can do it in not very long. You're like, how am I supposed to get to a payout trading 4 micros? You can do it in 5 trading days. It's not that big of a deal, especially with volatility like this. Are you kidding me? With 2 or 3 micros, you could get to it in even the minimum amount of trading days. Maybe not every time, but pretty consistently, I would say. And then you have a lower probability of blowing the accounts off a one-off loser, obviously, unless there's a glitch or something crazy, which is less probable. You're able to take more drawdown, which means you can handle more losing streaks. Those accounts are, on average, going to last longer. A lot of you guys are blowing accounts immediately. Here you go. Which, if you have a positive expected value, you're a profitable trader. Now you're giving an even bigger sample size for the numbers to work out, a bigger sample size of trades for that expected value to play out in your favor, which means getting to payouts. Okay? I'm telling you guys, like, this is sauce. This is free game. Please, 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 please do it. You'll go make a bunch of money, then you'll join the tomb after you make a bunch of money from the free stuff here, and we'll fucking go even further. We love it. But I think it'll make you a lot of money if you take that to heart. Don't stay in that quick buck cycle. So we've got a whole bunch of sideways action. I'm sitting here watching every single tick while we talk. And I think we're at again, this big wide range. So big wide ranges, I can take more than reasonable trades. What account size would you recommend for horizontal scaling? Any of them. Any of them. Doesn't matter. Doesn't matter. Just adjust the position sizing for the account. It really doesn't matter. But I will tell you, I think most people tend to kill it the most in the 50Ks. And the reason is because at a certain point, the 50Ks are relatively easy to pass. So if you do blow a set of fundeds, it's not that big of a deal to just get them back. And it's not very stressful or annoying. It's just like, all right, it's a fucking chore I have to do now. Like taking the garbage out. I gotta pass some evals, whatever. If you're married to like 150Ks or 300Ks, for example, depending on the firm, it's a bit tougher, for sure. It's more of a headache. It's like, now you have to go re-roof your house if you blow a set of fundeds, which is a bit more of a pain in the ass. So I think the 50Ks for a lot of people tend to be the sweet spot. If you like the 25Ks, man, have at it. If you're loving the 150s, the 150s are also great. But not everybody, of course, but the way that I kind of have seen the industry go is I think most people who are making the most money consistently tend to fall in love with the 50Ks. It's not the secret. It's not what's doing it for them. They're a profitable trader. It's just a good balance. News says the contradiction is, we're here to make money, but if that's your focus, you'll likely lose. Follow the process and the money will come. 100%. 100%. Yeah, I've been saying this for a very long time. By the way, I'm watching bar 34. We'll keep an eye on the wick high is 17 as well. Goes back to the comparison I always make with the shiny golden snitch, like from Harry Potter, floating in front of your face, and the dull object, the dull little steel ball that isn't very polished, and they're both floating in front of your face. And the snitch, the golden snitch with wings that tweets at you and gets you to look, that's money. And the dull ball that you picked up out of the rubble that's floating on the other side, that's your process. And if you chase the snitch, you will never catch it. But if you focus all your attention on the dull thing that almost no one can look at or has the discipline to stare at, and ignore the snitch, it comes up to you and kind of are we following? Kind of rubs into your neck a little bit, gets up on you, comes right to you. That's the truth, man. That's really how it works here, I'm telling you. I'm telling you, that's not like a hand wavy thing either, though I do think there is something to that. Putting yourself in a certain mindset and attracting these things, but that doesn't mean it comes without doing the reps. Because once you're in that mindset, I think the attraction in many ways is you having the attitude to do the reps consistently and focus on the thing and have faith that, okay, if I look away from that and I really focus on process, there is an element of faith here. You have to have faith that you will eventually find the success you're looking for if you look away from what no one can seem to look away from. Because, I mean, guys, use logic. On the logic side of things, it's like, you want to make a lot of money and you want to do it consistently. Okay, you're sick of this shit. Life is really expensive. You're sick of having to think of every time, oh, Jesus, nail in my tire. How am I going to make that work? Come on, man. We don't want to live that way. At least not forever. That's crazy. I hated living that way. I hated living that way. Something out of your control. You drive through a construction zone. Shit! There's a nail in my tire. I'm fucked. Now what am I gonna do? You're on the edge. How are you not? You're wiping years off your life with that stress. I hated living that way. But logic would say that if you want to make a lot of money and you want to do so consistently, look at the market. How do you really expect that that's going to happen if you don't have a disciplined, logical, repeatable decision-making process? You're doing random things. Tell me how that's going to do anything. Logically, really ask yourself, why would you expect, if someone else came to you and said that's their business model as for being a trader, you would say, what the fuck are you talking about, dude? You're on the greatest playing field on earth and you're gonna come in and just wing it each day with not even an ounce of discipline or even an ounce of repeatable decision-making process or any kind of methodology or thought behind it? You're gonna look at it, feel the vibe of what's going on, put on a trade, kind of wing your stop placement in an arbitrary spot, and then take profit when it feels like it's gone far enough. You would laugh at somebody else probably who said that to you. So why is that what you're doing? Crazy, dude. So we got a little single bar sideways range here. This is tough, kind of a repeat of 17 through 21 here, but even a little bit tighter. See that even a little bit more contained here, very, very tight. And if you look at the bigger picture, got sort of an upper range here. Sorry, we're in sort of the upper third of the range here. ATR still hanging out 63. J-Rob says, I usually do the 25K accounts because the lower drawdown keeps me from oversizing. Fair. But if that's a psychological trick, there you go. But I would also say that, well, I mean, if you just traded the 50Ks and went from 2 micros to 3 micros, it's kind of the same thing. But if you're making money, keep making money. That is the goal. All right. So wait to see here if the bulls can break us higher above the wick high of 22, 20, 17. Watching that, I imagine we probability-wise, you know, the more likely. Now, you guys know if it was good enough to be in a trade, I would be in a trade. But just for the sake of conversation, probability-wise, it's a bit higher probability that we fade back into the range rather than breaking out to the bull side and continuing for a sizable move. Of course, that doesn't mean it can't happen. We're just talking probability-wise. Yeah, minute 20 out here. Got the bulls testing the upside of this sideways range in the upper third. Obviously, the upper third is pretty wide. We've been in the upper third here since bar 30. You know, my cursor here is the wick high of 17. Coming in for a test. All right, roll over 35 into 36. ATR falling quickly. It wasn't that long ago that the average range here of a 5-minute bar on Nasdaq futures NQ was 79. It was, of course, higher than that even earlier, but even not that long ago, it was 79. We're now down to 62, 63. So it's falling, of course, through this 32, bar 32 through 34 range. 35 attempting the breakout, 36 fading back. Now, the breakout meaning above the wick high of 17, which is where my cursor currently sits. Unable to test that thus far. Bears sucking us back into the upper third of this big, wide, 200-point wide trading range that I have drawn in blue here on the chart. Now, I will say, I'm curious to see this top line? If we end up making this a thing, just a big wedge, and then it eventually breaks, but if it breaks downside, it's just back to this, right? Big sideways range. So I'm thinking about that. Okay, 215 out. We've got bar 36. Trying here again to take out the wick high of bar 35 and 17. Okay, 1 minute out. Now, if 36 does close above the wick high of 17, which is my cursor right now, that would be, for me, that would be the early trade, because it would be the first bar to close outside. The more it closes outside, the more willing I'd be to take it. If it were to close, like, even sucked back a little bit from here, I'm not into it. I'm gonna get rid of this because we know that that's there. And I'm gonna watch that wick high, my cursor, and see. I'm also intrigued because we haven't had a backside test of the range since bar 25. We've been in the upper third for a very long time. Let's see how this guy closes up. 7 seconds, stop limit buy goes out, get it away from the market. It's not too bad, bulls. There we go. Got me a fill. There. should actually be at 4. There we go. All right, let's see if these bulls can get the job done here. Now, of course, the risk is that the bears take over and suck it back into the sideways range, but 36 closed strong enough for me to be willing to take the early trade. I actually got a very good fill. My placement was really good on the stop limit buy. Placement gets a little bit tougher, by the way, when volatility conditions are high. It gets tougher to be precise with it, because if you think about it, 1 tick or 1 point is a much smaller percentage of the ATR, so of the move you're looking at. So it gets harder and harder to be precise with the placement of stop limit orders and do so quickly when volatility is high. But that's okay. I give myself a bit of grace with that, knowing that that is the case. So you can see my fills are not the best across the copied accounts because I'm in the money on the, and that comes, by the way, with volatility, because I'm in the money technically on the leader account, but the P&L you can see was still red, which means my average price on a lot of the followers is maybe 2 points in the money when compared to the leader. That'll happen, by the way. It happens the other way too. I don't worry about it. I'm much more concerned with just making sure all my copied accounts get filled, with the understanding that in higher volatility environments, sometimes you're not going to get exact fills because I'm using market orders on the follower accounts to ensure that I'm not getting partial fills on them. That's just part of copy trading props, and that's okay. I'd rather have my fills be relatively consistent, at least a lot more consistent, than have the nightmare, and believe me, it's a nightmare, I've dealt with it, of having partial fills across, 5, 10, 15, 20, 25 accounts or more. So if you're copy trading prop, I encourage you to use market orders for the followers. In the affordable indicators copier that I use, that is known as executions mode rather than orders mode. So my target here, I'm going to stick to a full ATR, which is currently 63 points. We'll see how that adjusts as time goes on, if necessary. Question, what's single day pass? Single day pass at Apex means that if you use code BIG, you can pass, that's BIG, you can pass the account. There's no minimum time frame for you to pass, which means technically speaking, just for the sake of making you understand, if you took a trade and 5 seconds later you hit the target, you do pass. There's no minimum. There's no minimum amount of trades. There's no minimum amount of days traded to pass the eval. It's just follow the rules in place without a timeline, at least on the minimum side. Yeah, we got a roll over 37 into 38. Now, the wick on 37 is a bit low, but if the bulls did take out the wick high of 37 in the first 20 seconds, which they have 5 more seconds to do now, then I would move my stop. Let's see if they can. Now, that would have been a no-fill, no-trade there on 38 if I put an order out on 37 at all. So I'll have to leave everything as is, including my stop. And ATR now 58, so adjusting as necessary as the ATR shifts. Coming down a bit. Is taking me back to around break even here. ATR sitting at 60. Market is slowing up here around this region, but volatility is still high, 60 on the average true range. Now you know what this is. This here, I took the early trade, or what I call the early trade. So this here is, I believe, some bull hesitation on breaking out of what was previously, still may be, a big sideways range of this guy here, right? Of course, I need the bulls to not allow that. And take us a bit higher here. ATR now 55 on the rollover from bar 38 into bar 39. Avi or Avi, my apologies, says the kind of psychology you built needs to be studied. Hey, you can do it too, man. You can do it. You can do it. It just takes having the confidence that you get naturally from having a track record and then having the self-respect from having the discipline. That's it. That's it. If people are ever like losing their mind on a trade, either one of two things is true. Either they're just having fun with you for the camera, or I think more often than not, there's actual anger or lots of frustration from maybe having a lack of self-respect from no discipline or no actual track record. Because, I mean, think about it. If you were taking trades, like let's say I lose this trade here, okay? And if I look back on my career and I'm like thinking to myself internally, I'm like, man, I'm never gonna make this work, blah, blah, blah. It's gonna be really easy to lose my shit. But on the flip side, if I lose this trade and I look back and I'm like, okay, but I've lost trades like this thousands of times and I still have this career that I've built and gone full-time as a trader and stayed full-time as a trader. So this is loss number 2012, whatever. Why do I care about that? I don't. So it's just, geez, Bears, look at this. It's really just building the track record and then having the self-respect from having discipline. That's all that goes into the psychology. There's no trick. There's no trick. There's no, like, coming in and forcing it. Just, I don't know. It just is what it is. And I really think that basically anybody can do it. Obviously, you know, probably helps if you're somewhat of a level-headed guy or person to begin with. If you have kind of a short fuse, naturally, I think that it might take just a little extra, but I'm sure you can still get there. All right, so the Bears are clearly trying to pull us back into the range. I've got my risk managed below 36. Let's see what they're able to get done here if the Bulls can step in and continue that nice clean close that we got on a bar 36. Okay, so this, here, let me just, yep. This is the range that we were looking at, right? And you've now got the Bears trying to fade us right back into that range. 36 was my entry. That is what I call the early trade, which of course the probability suffers a little bit, but the reward to risk benefits from taking the early trade. And it was such a clean close that I was able to take that. Now we'll see if the Bears can take out the wick low 36, head us right back in. If they can, I gotta tell you, I think we're looking at more of a wedge, if not just a straight up range. But if we've learned one thing over the last, well, I guess 10 years of trading, but over the last 18 months of going live here, it's that, I'll tell you what, it ain't over until it's over. So there's the rollover, 39 into 40. We shall see if it's over. Bulls trying to step in, wick the Bears out of the way here. Again, if the bears want to take out my stop, they'll have to take out the wick low of 36. Oh, Bulls try to step in, see if they can get the job done here. You know what I think we should probably do? Let's take bets. I'm running a poll. I'm running a poll. It is live. Hit it. What do you think? Ooh, a break-even option. Well, that would... So a break-even option would require a pretty specific chain of events. I would need it to give me an entry bar before it hits take profit, and then the entry bar's stop placement would need to be basically break-even, and then it would need to come back and hit that stop loss. So... That's why there's no break-even option. If that doesn't occur, the options are either stop, target, or moved stop. Or I suppose you could say early management if another sequence of events happened, which we don't need to get into. All right, there you go, bulls. Let's see. We've got an ATR of 55. See if these bulls got it in them. So that trade got within 4 points so far of stop. So the bulls can step in, get the job done here. Let's check in here on our poll. What are we looking at? How many of you believe in me? 82% win? Well, I'll tell you what, I hope you're right. That is something else. Probability-wise, though, just a hair high, I'd say. Question, bro, how much you weigh? Like 115 on a good day? So yeah, hopefully we don't see a big range here. We got 41, rolling over here into bar 42. So ATR is 52. So got 4 minutes left on this new bar. Again, that's bar 42. Okay, now my concern. What I don't want to see occur is this. Now, clearly, obviously, it's far too early to start making rash management decisions. You guys know how I manage stuff, right? Just based on that. So let it sit. Let it sit. Hey man, for the sake of how interesting this trade has been, if you haven't yet, I appreciate you hitting like here live on YouTube. Doing it up, trying to make some money here. Let's see if we can. Currently 20 points in the money, ATR 54. So these bulls have a lot more work to do, don't they? Let's check on our poll. How we doing here? Do I win or lose this trade? 77% win, 23% lose. Yeah, probability-wise, we're getting closer. Still probably a little high. Question, I weigh 80 kilo. Will I be a good trader? Well, you got it. I heard a rumor that in order to make as much money as possible trading, you have to weigh at least 200 pounds. It's just what I heard, man. I don't make the rules. Now, you know what's crazy is it's all just an illusion. It's all an illusion. The scale means nothing. At 80 kilo, you could look insane. Insane. There's a lot of dudes out there who might weigh $165. Not even that short. $165 with crazy genetics, who just have this crazy physique. It's all an illusion. All these bulls taking their sweet time. ATR sitting at 52, by the way. Which I like that we're maintaining a reasonable ATR. I'd prefer that ATR doesn't start to dip too much. But there you go, bulls. Let's keep that pushing. Good. Keep it moving. Keep it moving. 53 now on the ATR as this guy expands. I'll keep an eye on that, see if it increases to 54. It very well could. You know what I gotta do? I should hire somebody to read the ATR in real time into my ear so I don't have to glance over every 2 seconds. Take my eye off the ball. $1 million a year, who wants it? Okay, ATR 54. How soft of a whisper. Alright, you got me. ATR 54? Fucking. Alright, bulls. All right, try to get up through 28.4. There we go. Okay, 45 seconds out. I may have to multitask here. We'll see. Okay, 28 seconds. This may require a stop move. Priority number 1 is take profit. If I get to that point, ATR 54. Alright, here's where I tilt the keyboard. And look to do both at once. Stop currently at 304. Let's see, 5 seconds. Bit of a wick action on that close. I'll see if they take out the wick high of 43 in the first like 15 seconds or so. Nope, not going to get it done, so I have to leave everything as is. Back in the driver's seat. By the way, ATR is now down to 50. So it is falling here. Which is alright. It's still reasonable. I don't want it to fall too much more than that, man. We're working hard for this one, aren't we? You ever move stop to break even? Yeah, sure, only if it's a coincidence on a buy decision stop move, like we almost have had in this trade twice, but we didn't quite get. I've found over the years that arbitrarily moving stop to break even is only good as a psychological crutch. It doesn't improve the data at all. It makes you feel like you're improving the data because an individual trade, if it, like for example, if this trade that has had me at best here 46 points in the money with an ATR now of 51 were to turn around and stop me, that would upset deeply a lot of you guys. I don't care. So you optimize for not letting that happen by moving your stop to break even arbitrarily so. And it doesn't fix anything as far as data. It doesn't help. Believe me, I've tried every arbitrary stop move, every trailing stop setting, and the data never got better than just trading price action and being okay with having your heart ripped out on a few trades here or there, which doesn't even hurt after a while. It's okay, you get desensitized. Like this trade, for example, had me, 25 points in the money, and then got within 5 points of my stop, then had me almost like 45 points, or I guess almost 50 points in the money, and is now heading right back toward break even. It's all right. It's all right, it's just one trade. My ATR value is now sitting 52. If you haven't yet, hit the like button here on YouTube. And seeing if the bulls can head up, take out the wick high of bar 44 here, test that wick high of 43, which should take me pretty close to profit target. A lot more work to do here out of these bulls. Got to fade us all the way back upside. So I've been in this trade now for over a half hour. 40 minutes. 44 rolling over here into 45. By the way, 40 minutes, it's well above average here for me. You guys know most of my trades are more in that 1 to 2 bar range, at least quicker trades, I suppose, more like day trades / scalps. Sometimes it'll extend out as it turns into a range and turn into, 20 minutes, 30 minutes, 45, an hour. It's all right. It's all right. And the thing about that is, you guys know I'm big on opportunity cost. Well, since I look at everything as a buy or sell decision anyway, I'm still making those decisions in the form of management while I'm in a trade, which means I'm not missing any opportunity while I'm in the trade. So there really is no opportunity cost. The one thing that I don't like about trades that extend out time-wise is that as day traders, one of the big advantages is we minimize our exposure to the market. I don't want to call it black swan risk because that sounds dramatic, and true black swan events happen like once a decade. But if you want to think of it as that, sure. Minimizing our exposure to the markets is a great thing. But it's also like not the end of the world. You just work it into the data. Unexpected news is 50-50 anyway. Sometimes it hits your stop, sometimes it goes in your favor, which is why I stay so exposed to the profit side. You see my orders way the hell up there. There's a reason for that. All right, ATR 51 coming back in here for a test upside. Let's see what these bulls got here. Okay, ATR 51. Come on, bulls. Goodness. Got a minute 50 left here on this bar 45. Could see this ATR extend up into 52. Keeping an eye on that. Okay, 60 seconds out till the close of 45. Bulls having a heck of a time up here with these wick highs of 43, 45 now. There we go, ATR 50, we'll call it 52. Okay, here comes the rollover. 5 seconds. Get ready. Sometimes you might see a little pop. Yeah, a bunch of nothing on the rollover. By the way, ATR tanking down to 47. See if I can still do better than a full ATR. That's the goal. 48? All right, I got maybe a tick better than a full ATR. Copier's kind of slow today. Let it get flat there. Okay, so good. Good. Would you call that a miracle on Wall Street? I don't know. I don't know if it was as exciting as the miracle on Wall Street, but that was a pretty interesting trade. So let's keep it pushing here. Bar 46. 4 minutes out. ATR sitting 48. Let's see. Hey, Beyond, how we doing? I trade RAM. It's my own methodology, the wrench action method. Stick around. I think you'll learn a lot. Okay. Now I'm watching how 46 closes up. See if we can close up reasonably clean. But long time till this guy closes up. 3 minutes. See the bears wicking this guy back already. All right, hey, don't go anywhere. Give me 2 minutes. I'll be right back. All right, what's up? Welcome on back. So, yeah, I saw this bar roll over. By the time 20 seconds rolled around, it still had not taken out the wick high. So 46, I'm like, all right, wait and watch 47. Javaz, my man, major gains, how we doing? By the way, guys, hey, TakeProfitTrader. Daily payouts, baby. Which, those of you guys, if you're new here, TakeProfitTrader is the one if you're like, yeah, I'm trying to go at least part-time, if not full-time trading, but I really can only start with one prop. I would encourage TakeProfitTrader. They do daily payouts over there. Helps you get some money coming in quickly. Code BIG right now, BIG. They are 40% off and no activation fee, which the activation fee part doesn't sound so exciting, but the activation fee, when you realize it's $130 for everybody else when they pass, and for you, they'll say, oh shit, big dog, you used code BIG? Come on in for free when you pass the account. It's a good deal, man. Not to mention the 40% off the rip. Okay, bar 47 here, 217 out. Hey man, if you haven't yet, hit the like button for that last trade. That was something else. So, by the way, I haven't checked in with you guys. How is our Pharaoh Friday going? How we doing? Ooh, we got a nice bar 47. Matthew says he's doing fucking great. We love it. Sim small green. Mrs. B up 35.25. That's $3,500. Tremendous. Tremendous. You know, a lot of you guys sitting here watching, participating in the market, I really want you to internalize something. You know, you can make $3,500 in a day a lot of places, right? Those of you guys business owners, you can do that all the time. But most people in this world will probably never make $3,500 in one day, okay? And here, I want you to really understand, you have the potential to do 100 times that in one day. And still not even close to run out of liquidity, let alone 10 times that. I don't want to get crazy with it because some of you guys are going to say, whoa, I'm not ready for that, but 1,000 times that in one day. Some of you guys are like, okay, stop talking, you're losing me. You got to desensitize yourself, you guys, I'm serious. Desensitize yourself to these numbers. There's no shortage of capital, okay? There's lots of money. What grandma and grandpa told you, they came from a different time. They were Depression era. They had different experiences. They had different ideals. They were playing defense. And you know what? Were they wrong? I don't know. That's up for you to decide. I am of the opinion that only play offense. There is no time for defense. There's so much money out there, which, by the way, we don't just make money like a fucking weirdo for the sake of stacking it up and saying, haha, now no one else can have it. No, you want to make it so that when you go out to dinner and you see a waiter or waitress working their fucking ass off, because I was a waiter, I get it. I love that I was a waiter. I'm so happy I did that job because it was hard and you didn't make all that much, at least comparatively speaking. So when you see them working their fucking ass off and you find out they're a single mom with 3 kids and they work 7 days a week, you can go and tip them a fat amount. That's why we're here. Not to mention all the freedom. You should really internalize that plucking $3,500, like our friend here in the chat did today, the market won't even notice you were there. You pluck 35,000 out of the market in one day, the market will not even notice, especially NQ, man, will not even notice that you were there. By the way, 47 a bit outsized here compared to the most recent bar, so I'm watching 48. All right. When you get little volatility increases like this after such a slow move, would I be mad at you for taking 47? No, absolutely not. But I want to see 48. Give me a little more confidence in these bulls. Kevin, eyes off! Eyes off, the golden snitch! Don't you look at it. All right, we got a minute 10 out here. Okay, 30 seconds. We'll watch 48 close up. We'll see if these bulls can pop it a bit higher here. Give me a nice clean close. And I'd like to participate yet again here in this beautiful move that we're getting out of these bulls. 15 seconds. This is just the right song that we need for this right now. Get that order ready. Oh, you bulls, come on, get up! That's a lot of wick, bulls. That's a lot of insecurity. I gotta hold off. That's no trade for me. Watching bar 49. See how much wick is up top? That wick makes up more than half of that bar. These bulls aren't getting it done. All right, watching bar 49. And then maybe bar 49 will give me a nice clean close. And bar 50 will take me. What do you guys think? About 400 points in the money? I think that sounds about right. $800 points. I didn't realize we were being so weak. 800. We start at 4-figure points in the money. 1,000 points minimum on Big Bar 50 here. All right, we'll see you 49. Again, plenty of time here on 49 to clean it up. 3.5 minutes out. I will need it to close as a nice clean bull body right above the wick high, or above the wick high in general. Obviously just not like way the hell up here, because then it's an outsized bar. And if it does, I've got a stop limit buy for these bulls. We're coming right into 28.5, so I'm thinking about that. But we're already here now, basically through, well, sorta. We're pretty much through it, I'd say. The 50% retracement point of the move that you can't see. There you go. See, this is about that 50. It's really like the 40 to 60% retracement point, which is when you get a big move like this, the average in bulls, their average prices, on average, right, is going to be somewhere between here. And what happens when they start getting in there, or I guess somewhere between like here, when they start getting in that range, really interesting, right? They start pulling back. So on bar 36, we were kind of heading right into that. Still worked out. But, you know, 38, 39, it's like, it makes sense. Okay, because you end up getting maybe some profit taking out, or I guess not profit taking, but break even closing out of those average in bulls. They're thanking their lucky stars as they're on their knees in their office, begging anybody to help them get out at break even. They finally get out at break even. What do you think they're going to do when they get back to break even? They're going to take it off, which, by the way, is terrible trading discipline. But you know a lot of people do it. You know it's being done every single day. So it's something to think about, that 50% retracement spot. Again, it's not the holy grail, but it's worth knowing. And by the way, we probably already saw a whole bunch of that on like 18 and 17 through here too. But you could have seen it also here, but I would think most of it was done probably through this. All right, here we go. 49 actually looking a bit cleaner. Matthew says, close my position at orb today. Sorry, close my position at orb high of today with 2.2K profit. My man. What job is going to pay you $2,200 a day? And even if it is, or more, guess what? You got to put on a fucking button-down shirt, tuck it into your pants, put on dress shoes. Every time I put on dress shoes, I get blisters on my heels. I have to wear those little things around, you know, like those little, what do they call, like moleskin or something? It's ridiculous. No matter how good of shoes you wear, they always somehow rip your skin off your feet. By the end of the night, you're limping everywhere. So even if a 9-to-5 is paying you $2,200 a day, you're having to do all that. You're having to show up. It ends up being 11 hours of your day by the time you get in the car and drive there and go to lunch and fucking come home. And then answer calls once you get home because the boss is like, hey, I need you again. Or you can just sit here in your underwear like I know a bunch of you sickos are doing right now and trade and make more than that. All right, roll over. Good close out of 49. Let's see if the bulls want it. And if they want to give me a fill, then I will participate. And if they don't, then I will not participate. Ooh. 25 seconds, no fill, no trade. Gotta pull it. Gotta pull it. That gets 25 because of bar 48. Huge wick on 48. What about no fill, no trade, even if you gave it 30? They don't want it. I don't want them. All right, watching big bar 50. Big E says literally $2 away from passing a 50K. Size down. Take it easy. Into the finish line. 1 micro. Just take it easy. Get over the finish line. Take your time. Just do it. Take a trade. You lose it. So what? Take the next one. Get over. It's no big deal. Passed. Good work, Biggie. All right, we've got 28.5. You know, 28.5 has been kind of a son of a bitch lately. I don't really care. I just know that this market has looked at 28.5 and thought, let me think about that for a second as of late. But that's okay, we'll see. 2 minutes out. The beauty of this trade is that the risk really isn't that much if the bar stays what it is. But even if it stays what it is, it's like, okay, so we're looking at 28.5. But if it closes clean, I still gotta take it. We'll see here. Yeah, you see that right wick back? Big bar 50. Big E says I was down 1,200 today, now up 1,500. That's the way it goes sometimes. Hey, you see bar 50 here? Sucking back, big wick up top, testing 28.5, now coming back down into the 460s. What did I say about 28.5? I think these markets have been... The weird thing is volatility's been high, but it's been taking real note, like almost more than average of these silly little levels, like 28K, 28.5. 28K is understandable. It's a tier 1 level, not an S tier level like 25K or 30K. But 28.5, it's like, come on now. So that'll be the rollover, a big 50. Big 50 not really living up to its lore here on a Friday, Pharaoh Friday. By the way, guys, hey, Apex, they extended their legacy account offering because a lot of people were loving it. So code BIG, B-I-G, 90% off of all accounts, including those, and single day pass, which our friend here in the chat was asking about earlier. It means you can pass. There's no minimum time frame to pass the evals and get funded. Just for the sake of explanation, technically, because this is what I would ask. You'd be like, okay, is there actually no minimum, or is the minimum like a few trades? Are you exaggerating, or are you being like straight up like there's literally no minimum? No, there is literally no minimum. If you take a trade in an Apex eval and you pass in 3 seconds, by the time that session closes up, you will get an email that says passed Apex, whatever number the account is. That's what single day pass means. You don't have to pass in one day though. Code BIG, B-I-G. Question, is micro scalping allowed? What, you mean in the Apex evals? I do it. Well, by micro scalping, do you mean scalping micros or do you mean micro scalping as a strategy? And I guess I'd say, how micro are you talking? I primarily scalp my way through evals. And I've never gotten a phone call. They're like, hey, you can't do that. No one ever hits me up, so it's cool. You can scalp, at least at a human level within reason, even if it's 3 seconds. You know, I'm scalping my way through those evals hard. Yeah, but other firms definitely have scalping rules. Apex doesn't seem to mind, at least the way I do it. Well, I mean, I'll tell you guys what, with bar 50 sucking back and 51 taking out the wick low of 49, you know what I start wondering? Is this going to develop into a sideways range? So, I hope you guys all have a tremendous weekend, man. I appreciate you joining me here today. Hope to see you on Monday for Big Midas Monday. All right, hang in there. Have a tremendous weekend. I don't want to see anyone shaking on the floor Sunday evening because you haven't clicked a hotkey, or I guess Sunday afternoon, because you haven't clicked a hotkey in 36, 48 hours. You're going to be okay. I promise you. And I will see you all here for Midas Monday. All right, guys. Have a great weekend. Enjoy yourself. I'll see you soon.